Hi, this is Eric Boyce, CEO and co-founder of BK Wealth Consulting and BK Business Consulting. Thank you for joining us here today, and welcome to Reset 2020, Wealth Planning and Risk Control for Business Owners. Now, our topic today, as it might suggest, is really focusing around planning to help you as a business owner prepare yourself for not only the next several quarters, but also the long term and eventually your own exit or transition. And by way of background, BK Wealth Consulting is a firm that is geared towards working with business owners, not only on their near, but also their long-term planning. We're geared towards helping that owner prepare and lay the groundwork and the page stone that will eventually let that owner or owners exit the business in a very profitable, in a very satisfactory, and a very fulfilling way. And so what we're going to talk about here over the next several minutes and over the course of several slides is some things that you as a business owner can be doing right now to kind of begin to lay that foundation. Some of those things you might be doing already, and that's terrific. But if you're not, then perhaps let this be a goal that you can aspire to, and that can help you in the growth of your business. So wealth preparation issues for business owners are kind of an interesting topic because the majority of net worth for a business owner is in the business, right? Traditional wealth management and those models don't really apply. Owners oftentimes don't know what questions to ask because of the complications of what they have in their asset profile, and they have different perspectives. They certainly have different horizons than most of the investing public. And cares and concerns can be different based on, what's going on in the business or some of the contingent liabilities or some of those other things. Retirement planning, unfortunately, often comes after the sale or the exit, and it's not proactive enough. And oftentimes, that exit is not at a time of your choosing. Rather, it's untimely, as it says here. It's not anticipated, and so you're left kind of holding a bag and you haven't prepared, and then you're forcing yourself to kind of deal with the here and the now. And so what we think we need to do for business owners, and what business owners should be aspiring to, is kind of shift their focus, shift their approach, a holistic focus on this broader wealth equation, which includes both the enterprise value and the growth of that enterprise, as well as the sustainability of that enterprise. Because so oftentimes owners kind of focus on what they can see, in front of them in a 2-foot radius, and there are things that are anchors to value that they don't realize even exist, that can have a significant impact on net worth and retirement planning and all of these other issues when you reach the exit point, the satisfaction, the fulfillment of the transaction, and how it addresses their needs and things like that. So what we like to do is to help owners address that value at risk. What is that value at risk that they don't even see as being at risk? And then also, and I think fairly intuitively, a consultative approach that considers that big picture, that your business is an asset on your balance sheet. It may have a significant emotional value, and it may sit out there, and mental accounting is a significant behavioral impulse that you think of think of your business as something that sits out here, but it's not a part of your financial profile, but it most certainly is. And so we want you to think about that a little bit differently. And if you're not alone, if you haven't planned yet, only 39% of small businesses do any kind of budgeting whatsoever. And there's a lot of statistics on this page, but business owners generally have less than 1 month of liquidity available. And a lot of folks unfortunately found that out here over the last several months with the COVID pandemic and this manufactured shutdown that we were dealing with. And so the theme on this slide is really the lack of planning and preparation. And that's obviously one of the underpinnings of the title of this presentation. But I really want you all to focus on planning and preparation as buzzwords coming out of this, because it's clear by these statistics that people are not doing the type of contingency planning or certainly not the transition planning that they need to do. And then, usually if the few that do don't include the key staff that are going to need to know if there's a contingency that manifests itself in which the owner can't tackle themselves because of some reason. And we've had a good market environment, a good economy over the last 10, 11 years up until February. And so it's easy to overlook those things when times are good. And, contingency situations, you don't really think about that. But they're out of your control and they come at the most, at the most awkward times usually. And obviously what happened after the middle of February when the pandemic was not even a pandemic yet, but it was still kind of a rising fear and then turned into a pandemic. Those situations are out of your control, and it's granted it's hard to contingency plan for something like a pandemic, but there are other things that clearly I think letting COVID-19 serve as a wake-up call that you should sit down and say, well, what are the contingencies and how do I address those? Just even on a personal level, business owners, half have a will, but they haven't really started planning, and they certainly haven't integrated their planning for their business into their own personal financial and retirement plans. And we know that very few have a place, have a plan in place for transferring their business, and then without the succession plans. And without that kind of planning, oftentimes you don't get the business sold. And then, oftentimes even when you do get a business sold, and most often to a third party, there's something about that sale that wasn't fulfilling, that perhaps didn't accomplish your goals. So what are the questions that you should be asking today? And these are but a few, but perhaps some of the most important ones. And, frankly, some of these are kind of soft questions. They're emotional questions that kind of look in the mirror type questions that you should be asking yourself as a business owner. Well, first and foremost is, do you know what your business is worth? Most people have an emotional attachment to their business, and that's fine as a very initial starting point. But there's relatively little science that sits behind that. But have you gone to an appraiser to kind of get a basic assessment of what your business is worth? And at BKA Wealth, we do business valuation. We have a general assessment, what we call kind of a snapshot valuation, all the way to a full comprehensive business appraisal, and feel like it's a very important tool to kind of lay the groundwork for some of this planning that we talked about in the last slide. What is your level of satisfaction in the business, and is there anxiety that kind of lays below that? And oftentimes, this is a business owner's worst nightmare, that there's anxiety. What are the things that keep you up at night that you as a business owner feel oftentimes that you have to internalize because there's really no one else to talk to that you could share some of these intimate details with? What are your strengths and weaknesses? Have you done what they call the SWOT analysis? Strengths, weaknesses, opportunities, and threats. And how critical are they to the company's success, or even the company's, failure? The risk factors, your weaknesses, and how much of a weakness is it, and could it have an adverse bearing on the success that would cause that success to go away? What are the critical resources and the talent that you cannot do without? And we specialize at BKA on helping companies in that self-analysis of who they can't afford to lose and what resources they have to have. How do you lock those resources down? That's very critical, whether it's a key client relationship, whether it's a critical mass of sales that's accounted for by one or two people, whether it's somebody that has intellectual property knowledge or process knowledge that's critical to the success of the company. And then again, what's your plan and what's your urgency in getting there? With all of those things in mind, oftentimes, we find, as the statistics on the previous slide show, that people aren't doing that planning, and oftentimes there's not an urgency to get there until it has to be done. And then what does your own exit look like? What you want to be doing in 5, 10, 15 years, and then who takes over at that point? Are you leaving value on the table? Again, some of this gets back to the valuation question, and do you know what your business is worth? But obviously, there are things that an appraiser is going to be looking at, and these are not quantitative things; these are qualitative things. Goal setting and visioning. For companies that have done this visioning and done some of this preparation, and just even establishing simple annual goals, which surprisingly enough, a lot of companies simply don't do. Those are very important in the definition of what value is on a company. There's the kind of that mechanical analysis that's done looking at the financial statements, but there's also some risk factors that go into discounting, discount rates, and the rates that are used to help value a business that can be adjusted and altered and influenced by whether or not a company has done goal setting, visioning, whether they've actually sat down and assessed their competitive situation. And I think that third bullet point is so crucial, and it's where most companies trip up, and that's the financial controls and data, and having adequate financial systems in place, having adequate financial reporting, and even the controls. How many people do you have? Do you need to have to sign a $5,000 check, and those types of things, and who handles petty cash? There are a lot of things like that that companies aren't thinking about, but can actually have a bearing, and if they're not done correctly, can be an anchor to value. Risk control, and this is at multiple levels. Key employees, and this is what we were talking about in the last slide. The risk of losing those key employees, and what happens to those employees if something happens to them. What is your contingency plan? Do you have them locked down? Are they a flight risk to leave your to leave your company and perhaps go directly over to a competitor? Operational risk is something that's very strong. Are you, if you're a manufacturer, do you have controls in place to enhance safety and provide for a safe working environment? And then obviously on the personal side, you can sometimes kind of, look over, look into the forest and not see the trees. That even on your personal side, if you're not controlling your own personal risk, umbrella liability policies and things like that, it can then have an implication on the business if you're having to sell an interest or sell the company or something like that. And then again, to this whole theme of trying to prepare in as much as you can for what you don't know is coming, but what you think might be out there, perhaps as a tail risk, the unknown or the unknowable. And then finally, are you leaving value on the table because you're not necessarily looking at the most optimized tax structure, your legal structure, how you're paying yourself, and even to the extent, your retirement programs and any supplementary or non-qualified programs that you may have in place for some of your key people or even yourself. Tax optimization is extremely important in terms of the value that could be added to your company. So a proactive checklist is something that I think we offer most of our clients as a really good starting point. And it's self-reflective. It gets people looking in the mirror, and it begins to ask some of these or provocative questions, if you will, that get productive discussions going and get this planning work moving forward that needs to be done. Obviously, understanding your competitive situation, what's your competitive moat? That means, how wide of an opportunity do you have within your industry? Your sales strategy. Sales is the mother's milk of profits, and so you've got to have sales. That sales leads to everything else. So do you have a strategy for that? Do you have operational efficiency measurement? Now, how are you able to monitor your operations, and are they efficient? And your talent, how do you define your culture? How do you define your, I should say, talent requirements? But how do you look at your personnel situation and your culture? And that's a very soft topic, but we spend a lot of time with our clients talking to them about the mix of personalities and the mix of strengths and weaknesses, and how you can optimize a working environment based on the personality traits of the folks that you have in place. And obviously, you've got to lock down the people you can't afford to lose that would otherwise have a negative impact on that culture. You got to develop budgets. You have to have those financial controls. And nowadays, obviously, information security is paramount. Taxes we've already talked about. You have to spend some time and get some expert help on how to optimize your tax structure and optimize some of the things you're doing with regard to cash flows. Understand your long-term goals and objectives, your plans for risk control, and your contingencies, and beyond, and without a doubt, your own transition. And then really finally, develop a unified personal financial strategy that includes and takes into consideration your unique risk profile as a business owner and this big asset that you have that constitutes the majority of your financial statement. So I hope what we've been able to do with this short program is to provide some basic information and some things that can help thought provoke as you sit back and assess your own position within your business, your industry situation, your personnel situation, your culture, and the long-term elements of the discussion, which include your own exit and transition, and who takes over. We enjoy working with business owners. We know that most of them aren't able to do exit planning and do some of this key person lockdown. And so BKA Wealth specializes in not only being able to provide business owners with the business valuation and appraisal, but we also help them out with both qualified retirement programs, which are like 401ks, Simples, and SEPs, to non-qualified programs, which are Section 162 executive bonus plans, supplemental executive retirement programs, or SERPs, and other types of deferred compensation. We help business owners with group benefits. We certainly help them out with wealth management and the financial planning aspect of transitioning their business interest, and we help them with some tax consultation through some outside partners that we have. We would certainly enjoy visiting with you. We hope you have enjoyed this brief presentation, and our information is on the slide, and we would love to talk to you. Please feel free to reach out. We'd enjoy visiting with you. I hope you have a wonderful day.